Good morning, everybody, and welcome to Beat the Bell presented by Kane Capital. Excited to get things underway after what was a pretty turbulent week in the markets last week with CPI and FOMC, and then that Thursday, Friday sell-off into monthly option expiration. So to talk about what we can expect headed into this week of trading, we have an awesome panel with us, starting with Coach Dipka. Coach, good morning, brother.
Morning, guys. Good to be here.
Good to have you. All right, Money Mander.
Happy Monday. That little jingle just makes my morning every single time. I love it.
I know. It fires me up. It fires me up. And we have Diamond Trades.
What's going on, guys? Let's get after it this week.
Ramsey Rippers.
What's up, guys? Bags under the eyes, per usual, ready to go.
And the man of the hour, who hasn't been on the show for a couple weeks now because he was on a trip, but very excited to have him back. Mo Mamba, what's going on?
What's up, my brother? What's up, my man? I'm glad to be back. I miss you boys big time. Miss the Discord even more. Let's rip it this week. Let's have a great week. Rejuvenated, good vacation. Let's get back to it.
Awesome, man. Excited to have you back, as I said. All right, let's get started here with our Fed forecast. We're going to go over to Mander and Noah. What do you guys got for us?
Yeah, so let's start off with the economic calendar for this week. The data is going to be a little bit light, but the housing market and the consumer will be in focus. And we're going to see how we're doing, amidst increased interest rates. So on Monday, we have the NAHB. They are going to go ahead and give us the housing market index. That's just basically tracks the sentiment for home builders. It has declined every month so far this year. It had a preliminary reading in November of 39, which is down from 45 in October and 54 in September. So that trend continues to come down. Housing starts comes out on Tuesday. In October, housing starts were at an annual rate of 1.4, down from 4.2% in September and 8.8% from the year earlier. Wednesday, we're going to get existing home sales, which decreased 5.9% from September, which was the ninth straight month of declines this year, and has declined from 28.4% from a year earlier. Thursday, we're going to go ahead and get initial jobless claims, and then Friday is really going to be the big day this week for data. We have PCE. The Commerce Department releases figures on household spending, income, and inflation for November. Both of these numbers rose in October, and this PCE is actually the Fed's preferred measure of inflation, which rose 6% in October, down from 6.3% in September. We'll see if that trend continues to track downward, but that PCE number on Friday is going to be very important. We've also got Michigan consumer sentiment on Friday to pay attention to. Manor, what do you got?
Let's take it straight into earnings then. And geez, the housing market looks like it's in a pretty tough predicament here, but let's take this straight into stock earnings. So also pretty light on the week. The two I wanted to hit on here was FedEx and Nike. FedEx, if you guys remember, guided down at the last quarter, saying they expected this quarter to be down about 4% on revenues, and the stock landslide. It was down 21% overnight. However, from that, it's now actually up 21% after the 5-day sell-off that ensued. It's up 20% from year-to-date lows. So this is one I'm really curious to see how they pretty much SMIs has forecasts for top and bottom. I'm really curious to see how this comes in with the 33% miss in EPS from the last quarter. I think investors are going to be kind of cautious on this one going into it with that. And then Nike as well. These are really the two I'll be watching. So Wall Street's estimating about 65 cents in EPS and 12.5 billion in revenues. This one actually was people were expecting this to get killed on the China news with the China lockdown, one of their biggest global markets. They were expecting this to get killed on revenues. Really what's ended up happening on Nike here was the growing inventory is what's killed this. So they have a 44% global increase in inventory and 65% increase in domestic inventory. So this will be a big one. I think investors are watching to see if they were able to cut down production and kind of push some overdue inventory versus having this continually grow, because revenues and EPS really haven't been the problem on this name so far this year. As we get out of earnings here, the big thing that I wanted to hit on today was the credit card delinquency rise. We finally have data to hit on this. Me and Diamond have been talking about this pretty much all year as we had this all-time high in credit card debt outstanding. The one thing we were really hitting on was as the Fed hikes rates here at unprecedented levels, it's obviously going to cause interest rates on credit cards to go up. And we really wanted to see were consumers able to maintain this and basically make interest rate payments, or were we going to see a big uptick in delinquencies that will then fold right into companies' revenues, right? Because if we start seeing credit card delinquencies across the board, consumers are running out of money to spend. If they're spending mostly on debt to begin with, and now they can't afford these interest rate payments, where are they going to be buying? Where are they going to be increasing revenues in these companies? And so if we go on to the very next one here, Ryan, thank you. As we're finally starting to see this, right? We have personal savings rates at pretty much all-time lows, 50-year lows, unemployment rates still at 50-year lows, but we're starting to see this really, really sharp uptick in credit card delinquencies. And so this was one thing I wanted to hit on. I'd like to get Diamond's take on this as well.
Yeah, I mean, it makes sense. When the payments of your debt service is going to go up, you expect to see more delinquencies just across the board. And I think that we can expect to see even more of that, coming out of the holiday season, where a lot of people might have put some of their holiday spending on some credit cards, right, with these higher interest rates than anticipated. So it'll definitely be interesting to see how that plays out and what that means for the broader economy into 2023. But we can go ahead and wrap up with the markets and the Santa rally that everybody has sort of been expecting, right, all of December. So Ryan, if you want to pull up that chart, honestly, we have only 9 trading days left in the year, right? So bulls are sort of running out of time to stage this fabled Santa rally. But if you look at last year's price action, we're really right on schedule. This seasonal year-end push sort of ignited right after the December options expiration, which we just had on Friday. We had a sharp move higher in the indices last year around this exact same time. So if history repeats itself, this should be a good week for the bulls. Obviously, the current economic state and the structure of the market is going to be vastly different than it was 12 years ago. Growth concerns have really put a damper on this month's price action. And so we'll see if the market wants to give bulls one last present before the end of 2022. That's going to wrap it up for us on the Fed forecast. We'll pass it back to Alejandro.
All right. Thank you, fellas. Time now to talk about the system. Let's take a moment here, guys, just to recognize how beautiful the end of last week was on the system. The break below the 50 SMA. We, of course, got the sell signal, the bearish crossover, the 10 SMA below the 50 SMA, resulting in a 130-point sell-off had you taken that trade. So coming into this week, what is it that I'm looking for? We know that once we're 100 points extended from the 50 SMA, remember that's our sort of take profit rule. That's when we start to become more cautious. We recognize that things become a little bit more difficult after a huge sell-off being extended from the 50 SMA. I'm now watching for price to retrace to that 50 SMA as it continues to come down hard, okay? So in order to look for a new trade, there's one trade that's really going to be on my radar this week, and that's going to be the break back over the 50 SMA and potential buy signal. But we have to take a look at the hourly chart per usual, and we have to understand that this 50 SMA is starting to come down on the hourly. We still have 10 SMA resistance on the hourly. And so things by no means look bullish. So in order to trade long, I'm going to need a break over the 50 SMA on both charts, and that's going to require a lot of patience. In order to trade short, I want to see that 10 SMA continue to serve as trend resistance on both the time frames, the 30-minute and on the hourly chart. All right, guys, that's going to do it for the system. I'm now going to pass it over to Ramsey, who's going to give us Bet the Bell.
All right, guys, as Alejandro said earlier this morning on the intro, crazy week last week. We are approaching very large pivot levels on some very large names. We're going to get right into it. So first question of the day, as always, everyone knows green or red today. Let's start with you, Alejandro.
I'm going to go with green.
That's all he's gonna. That's all he has to say.
I'm not giving an explanation today.
Doesn't need an
Mainly
explanation.
because I don't have one.
Green from Dwayne Capital. Noah, what do you have to say?
I'm gonna go green as well. Just looking at the chart, we're pretty extended to the downside from last week, and we filled a nice gap in SPX. So I think that we may get a short-term bounce here. So short-term bullish for me.
All right, like it. 2 greens. Thank you for the explanation. Vin. Excuse me, Mo.
What's up, man? I'm just distracted. I think Coach is hulking out here, man. Check that out.
Green, green because of Coach.
Yeah, green because of Coach. There we go. No, I think today we might come down and test this 380 range and bounce off. No, actually, I'm gonna stick with green. Yeah, stick with green. I do think we test it, and then we have a nice bounce into the close.
Gotcha. Green from the Mamba. Let's bring in the Grinch. Dipka, what do you have to say with?
Yeah, I'd love to say I did this intentionally. I don't know what's going on with the green screen, right? But I'm going to go with green. A little bit of an oversold bounce is my reasoning. 380 is a really big support. Go back on the daily. I remember trading this 380 a bunch of times. It's also actually, if you do your fibs on the weekly chart, from the COVID low to the all-time high at 479.98, that will give you 380. So it's actually a COVID fib as well on the weekly chart. So 380, expecting a bounce personally.
And last but not least, Money Mander.
Red. One, I got to take red. Everyone else took green. They're way too bullish. I think everyone's too bullish, and I'm not fighting the trend here. VIX is still green going into the sessions today. Future sliding right as we speak, so I'm going to take red.
All righty. And then we're going to go into our second question of the day. I just want to know, I mean, we don't need to say too much about it. I want to know if XOM is closing over or under that $100 level by the end of the year. Right now, obviously, we had a pretty nice pullback, healthy pullback on the strongest sector of the entire year. From where we down from about 115 to 105. We're now hanging out in that 105 level. So it's proving as a pretty nice area of support. Over under 100 end of year. Noah.
End of year, I'm going to go with under. It's a bit aggressive, like 9 trading days left, but I'm going to go with under. I mean, if you were in this name, if you allocated towards energy at the beginning of the year, you have some nice profits that you may want to take before the turn of the year. And if you just look at the chart, technically they broke that 107.5 support, came back, retested, rejected. I think it's down from here. Me and Manor have been calling for the top in energy in 2 months now, so we got to be right eventually.
Yeah. Mo.
XOM. So I think under. I'm with Diamond on this one. I think under 100. We got a nice little break hook and go off of this 108.55 level. Clean break hook and go. It did form. It's consolidating right over 103.4. I think once we break through that and hold, that's the trigger to close it below that $100 level. But I'm going with Diamond here on this one under 100.
Beautiful. And Money Mander.
I'm just Mr. Fade here today. I'm going to take the over here solely because I think we pretty much trade sideways in this on the exact same notion that Diamond said. I think everyone in energy this year is up, but I don't think they sell until the start of the calendar year of next year. And so this thing's retested and held that 103.50 level, which was previous year-to-date highs like 5 times now. Just continues to get a bounce. I think we pretty much trade sideways, and we'll see over 100 by the end of the year.
It's interesting you said that because you say you think we hold into the end of year and start our sell into 2020, the beginning of 2023. So, man, let's bring you on here. I actually have a question. I saw a pretty nice graphic from one of the macro guys on Twitter about how the energy sector in general has the largest outstanding put open interest going into 2023. We've spoke about it so many times, that divergence between XOM and the oil markets. And then now you come in and say that you think that the sell really starts in 2023. I kind of want you to just share your mindset on that divergence and this data that we see with the largest amount of open interest going into puts into 2023.
Yeah, absolutely. So Diamond made a great point here, and we're kind of just getting nitpicky with 9 trading days left on the year. But if you're big money, you're placing your bets and you're buying time. And so I saw the same graphic. It was for months and months out into 2023. And I think they're really just placing their bets on what we spoke of. XOM has outperformed the energy sector and particularly crude oil futures by, crude oil itself, like 60% here. Crude oil is pretty much flat on the year, and XOM still almost at all-time highs. So I think your big money's placing their bets on this pullback where it's really just an unjustified outperformance here. It was kind of like this little oil craze that everyone wanted to get in XOM because it was the only thing outperforming this year and doing well. I think that we're still pretty spot on where we got top in oil. I think we said XOM pulled back around 112. It rolled over at 105. So I'm still, of that same sentiment, but you just got to take time on that. Who knows how long it takes to pan out.
Right. At high of year, XOM, I believe it was 115, 116, up 100% year to date. I believe we opened the year around $58, $60. So it'll be interesting definitely to see what happens going into 2023. Thank you, my man. And with that, we will wrap up Bet the Bell.
Thank you, Ramsey. We're going to go ahead and head over now to Coach Dipka for Dipka certified levels of the day.
I'm literally green. Let's pull up the chart instead. All right, guys, you know the deal here. We got 60 seconds. Ryan is going to put the timer up for us. We're going to go over today's daily levels. I really only have 3 for you, and one of them is a zone. So my big watch personally is 385.07 this week. Okay, that's going to be my big resistance, 385.07. If we come up to 385.07, I may look to take puts. I'll have to gauge the price action, the volume, etc. My big support for this week is going to be 380 to 381.09. Now, you see on Friday, it was low at 381.09, those candle body closes. However, we also can't ignore that COVID fib that I just mentioned, right? So that COVID fib is at 380. So for that reason, I drew a zone from 380 to 381.09, and that's going to be my big support for the week. So top watch for Coach Dipka, 380 to 381.09 for my support and 385 for my resistance. I am expecting a range bound actually couple days here after those big sells the past 3 days. So with that being said, I will pass it back to Alejandro.
Coach. Mo Mamba, unusual catch of the day. What do you got for us?
Unusual well flow for the month. So I pulled up the 0120 expiration on SPY. Something I wanted to take a peek at. I do have an analysis we're going to get into as well, but I do want to get some sort of sentiment going into January, right? So towards the close, towards the end of the week, we've actually got some decent put flow. Actually, throughout the week, we've got put flow come in for next week's expiration. And I did up the premium 500K plus premium on SPY. And as you see, the majority is put. You do have a call here and a call there, but the majority is put, especially on that Friday. So they're looking for some sort of maybe a red week this week, maybe Monday, Tuesday, and then we finally get that relief bounce, that dead cat pounce on the indices. So this ends up giving me the sentiment of us coming down into that 380 level, right? That 380 level. We do have a nice demand zone down here. We will get into the chart right now. Let's go into the daily time frame. So this is SPY right here, daily time frame. So what I'm expecting here for this for the next few days is SPY to come down and test this 380 level right here, right? And then finally come up and get a dead cat bounce, a nice relief bounce. We've had a pretty sharp drop from after the CPI data release. Once we do come up here, this is where I would look to start grabbing some shorts, right? Not specifically the indices, could be other tickers. We'll look for some setups in the Discord and go about them from there. But for now, I do expect this to come down and test this 380 level. One thing for me is I will not be shorting or swinging short any tickers from this 380 down to this 378, let's say 378. So we have a really nice demand zone down here. I'd be very cautious swinging short anything once we do come down here, the market we would look for a relief bounce off of this sharp drop. So my prediction over here with the indices coming down in this supply is we do finally get a bounce into this gap fill, maybe trap some bulls after a strong move into, especially if we get a strong move up into this gap fill zone over here. It's also a daily supply zone. Trap some bulls and then make your way down. If we do make our way down, I do think we will finally break this demand zone down here, right? Maybe get a little bounce and then finally get through. But for now, I am looking for the market to give us a nice relief bounce, dead cat bounce into this gap fill up here. All right. Thanks, Hondo.
Thank you, Mo. All right, guys, we're going to start to wrap up the show here with today's top watches. We'll go around and ask head traders what it is that they are taking a look at headed into today. And to kick things off, we're going to start with Coach Dipka.
Yeah, so my top watch today is going to be that 380 COVID fib, big demand zone, and we also have that 380-109. I'm looking for a bounce in this demand zone personally, and honestly, I think we can get back to 383, maybe retest those, those pre-market levels there that you're seeing from this morning. But I don't really see too much upside personally this week after the brutal sell-off we just saw. Maybe a relief rally can get SPY to 385, but yeah, just too much weakness for me. I'm going to say 380 for a scalp is going to be my top watch this week. 380 for a scalp, that COVID fib.
All right, thank you, Coach. And Mo.
Yes, sir. So we got Intel here. Intel, pretty wide range on my levels today on Intel. You guys have been seeing the chip sector. They've been strong movers as of recent. So we are opening up pretty flat on Intel. What I'd look for is that 27.5 level and the 26.5 level. It's a dollar range between the levels. Otherwise, I will not be touching this ticker unless we do break out. You guys can see the nice clean consolidation off that 27.5 level up to the left, off of Thursday's price action. And then the lower level, 26.5, obvious consolidation there. Break and hold through those, flip the upper level into support or the lower level into resistance to trigger the trade for me. So.
All right, thank you, sir. And lastly, we are going to go over to Diamond.
Yep, top watch is going to be Netflix. This is not necessarily going to be a today watch, but this is a daily chart. You can see that we sort of came up and rejected that gap fill resistance. I know that Coach was eyeing that level nicely, took a short position up there, got paid handsomely. We closed outside of this wedge on the daily. I'm going to watch for a potential retest. This is not something I want to short like immediately, especially after that pretty aggressive gap down last week. And I could actually see them giving us like a short-term bounce. They love to play games with this name, but I'm looking for some continued weakness into 2023 to possibly take a short position as this one comes back down to earth to 250. It's been holding up really nicely, relatively well in the latter half of this year. I expect that to change.
All right, guys, that's going to do it for this morning's episode of Beat the Bell. Thank you guys for joining us. Thank you for the support. If you liked the show, please do us a favor and like and subscribe on the YouTube. That helps us out a ton. Good luck trading this week, everybody. Excited to get into it. For those of you that don't know, there's 7 of us plus Stock Sniper, so the 6 that were here on the show. Coach's screen. I can't even take this guy serious. Look at him.
He's hulking out, bro.
Every time I look, it's greener and greener. Dude, he's
ready
playing
to
with
trade.
his settings in the middle of the show. Wait till after, dude. Oh my
His
God.
superpowers are all over the place. Yeah.
Anyways, the 7 of us trade live all day, every day in the Kane Capital Discord. You can join at kane-capital.com. Before Coach does anything more ridiculous, we're going to go ahead and get out of here. Have an awesome trading day, guys, and we'll see you back here on Ramsey on Wednesday morning at 8:30 a.m. Eastern time. Peace, everyone.